Barry Long, the real estate expert, the credit repair king representing Cash Flow Detroit, and Zoom Credit Repair. Coming to you guys this Wednesday for the long report. This evening we're going to talk about the BRRRR strategy, the BRRRR real estate investing strategy. If you've been getting good information from me on any of the social media channels, please like this video, share it, tell your friends, comment. If you have any real estate or credit repair related questions, DM me. I'm happy to answer any questions. I really don't want to get on the phone with anyone, but we can definitely communicate via email or direct message. Buy, renovate, rent, refinance, and repeat. That's what the acronyms BRRRR stand for. Before I start talking about the BRRRR strategy, I want to know, is the home that you own and you live in, is that an asset or a liability? Right, just tap in with your answers. If you're watching the video live, is it an asset or a liability? I'm gonna wait 5 seconds to see how many people decide to participate. And 1. Okay. How many did we get? Assets?
No response.
No response on assets. Liability, we got 2 for liability. You are correct. The 2 people that selected liability, right? Your home, unless it's generating income for you, is a liability. We've been sold this thing in America that your home should be your largest investment and that you're not doing well in life until you own a home. I'm here to tell you that that home is probably why people will never achieve financial wealth in America, because their biggest investment, what they think, is actually a liability, right? So that thing that makes a lot of Americans feel good about themselves, their home, is actually the biggest liability that they own, okay? So your home, if it does not put money in your pocket, it's a liability, right? If it does not directly put money in your pocket, it's a liability. If it takes away money from your pocket, it's a liability. House, you got utilities, you got taxes, you got insurance, you got maintenance, yada, yada, yada. Liability, despite what you may have heard. Do you have to pay cash to purchase a property that you're going to do the BRRRR strategy with? The answer is no. You can absolutely take out a mortgage to buy these types of properties or to implement this strategy. Let me correct myself. To implement this strategy. However, if you do decide to pay cash, then there's something called delayed financing, which really tracks where you got the cash from. So you want to make sure that you communicate with your loan officer, whoever's going to complete the refinance part of the deal for you, to make sure that, 1, you're credit and income qualified to actually execute the refinance, and 2, that all your ducks in a row as far as where you're getting the money. Are you borrowing it from your parents? Are you taking it from a home equity loan that you have on your primary residence? Is it mattress money? Those lenders, whoever completes that final refinance, is want to know where you got that cash from. So definitely get with your loan officer ahead of the game as opposed to at the end. How long does it take to complete a BRRRR transaction? Well, that depends on a lot of different factors. Typically, it takes about 30 days to close a real estate deal when you're buying the home. So let's say the clock starts there. And then you have to close and find contractors and line up your renovation schedule. That could take 30 days, and I've seen it take even longer in some cases. So how quickly you complete it is really going to depend on how well you have your ducks in a row so that you can get in and get out, so to speak, in a timely and efficient manner. Can you use VA, FHA, and 203K loans to acquire the property? You absolutely can. And in all actuality, I recommend those loan types because you can buy 1 to 4 unit properties. It's set up for first-time home buyers and people with little to no cash to put down on the property. So what does that tell you, America? If you qualify for an FHA loan product, then you can put a very little amount of money down and become a landlord, get the rehab costs built into the loan product so that you can renovate the home to 2021 standards and be able to get the highest rents possible for each of those 1 to 4 unit homes. And I'm saying 1 unit homes because Airbnb and VRBO is becoming very popular, where people are actually giving up their bedrooms to invite people through these platforms in the home just so they can generate income out of their primary residence. So a strategy that can be used from single family all the way up to 4 unit homes. As I said, great for first time home buyers and people with not a whole lot of capital to put into a deal. Get approved for your refinance before you buy the property. Whether you're buying it using a mortgage or you're buying it using cash, talk to that lender to make sure that you can do what you want to do. Unless you are the borrower and have tons of rehab experience. And in my notes here, I got you in all capital. So ladies, you know what that means. Unless you specifically are the borrower, make sure you have rehab experience. If you have no rehab experience, then you want to make sure that you only employ licensed and insured contractors. Because with those people, you do have some sort of recourse. If you're using your cousin Johnny or your brother Ray or your cousin Ken, and they decide not to complete the work or don't give you the quality of work that you want, there's very little recourse that you have with that type of person. But if you get a licensed and insured company, it may take some time, but you have some recourse. Okay? And I'm going to say it again, unless you have the experience, not your significant other, not your mate, not somebody that you know, your brother, your cousin, whoever. If you don't have that experience, leverage the experience of a contractor, licensed and insured. And Cashflow Detroit has the relationships to facilitate these transactions, from buying the properties to exiting them by pulling your cash out with the refinance product. So I've taken the time to do a bit of a demonstration. So we're visual people. I'm visual. I like to see things on paper. The left-hand column shows how you purchase the property. And just real quick, $80,000 purchase price, putting $50 in rehab. Your total all-in cost is $130,000. This property retail value, it appraised at about $200,000. You can buy an $80,000 property using a FHA loan with 3.5% down with only $2,800 out your pocket. FHA 203K, same guidelines, $2,800. If you're a veteran or have the veteran spousal benefits or dependent of a veteran, the VA loans right now you can get with $0 down. $0 down. And we've seen clients get conventional loans for as little as 3% down. So that's $2,400 out your pocket to buy an $80,000 home, put $50,000 rehab into it, to have an all-in cost for $130,000 on a property that appraises for $200,000. When you execute the BRRRR, you're going off the $200,000 value. Typically, we go for a 70% loan to value, which in this case is going to have you with a $140,000 loan amount. Okay, you owe $130,000. You borrowed the purchase and you borrowed the rehab, so you pay that off. Now you got $10,000 in cash off a $2,800 out of your pocket investment. So my math tells me that if we're looking at an annualized rate of return, you're able to get 350% interest using that $2,800 in that matter, in that deal, if it takes you a year to do. If you're sophisticated and lucky enough to be able to get it done in 6 months, then your return goes to 714%. Now I'm going to talk to you all about everybody who's got all this cash in the bank. I implore you to find out what your bank is paying you on that cash. So you got a checking account. I had someone check Michigan First. They're paying 1.5% on money sitting in a checking account at Michigan First Credit Union, which is a local credit union pretty popular in this area. And I want to say that this person checked another financial institution and the rates were not that much higher. So 0.15% in the bank versus 357% in real estate deals. Make it make sense. Jabari Long, Cash Flow Detroit, Zoom Credit Repair. You have watched this episode of The Long Report. On Monday, in our Zoom Facebook Credit Repair group, we're going to talk about behaviors and how your payment behaviors affect your credit score. Next Wednesday here, right on IG Live, The Long Report, we're going to talk about this 203K loan product that I mentioned here in this example to show you how it can be used to add value to homes and enter the deal for as little as $2,800. Jabari Long, want to say happy holidays to you all. Have a good night. I'll take it from here because you done